Welcome to this year's World Business Angel Investors Week. I hope you can all hear me. My name is Tuti Mwambenja, and I'll be your host, and I'm the country chair of this year's World Business Angel Investors Week, Tanzania Flagship. The global chair of the World Business Angel Investors Week, Mr. Babas Altuntas, distinguished keynote speakers and panelists, all participants of the World Business Angel Investors Week, ladies and gentlemen, I'm tremendously honored to extend my appreciation for the importance you have duly accorded this significant event. The World Business Angel Investors Week creates a unique opportunity to showcase fresh and innovative ideas that inspire current and future leaders of the world to take risks on new ideas, collaborate across sectors, and transform world economies through the scaling of entrepreneurship, angel investment, financial inclusion, and innovation. This global week-long event is an open platform for connecting, learning, sharing, and exchanging know-how that promotes entrepreneurship and angel investment ecosystems. Surveys reveal that most small companies and entrepreneurs in the Tanzanian startup economy are suffering financially. The pandemic has forced startups and existing small business founders to transform their business models. Since the onset of the crisis, it has become imperative for businesses in Tanzania to embrace new ways of working and doing business, including opening their digital doors. In Tanzania, entrepreneurs are driving change in the knowledge economy. An increasing number of them are leveraging creativity, know-how, new technologies, and processes to provide market-based solutions that address pressing social and environmental issues. Tanzania now faces the task of recovering from the worst economic crisis in recent history, but it will take a coordinated, visionary, and ecosystem approach if we are to tap into this potential. In our country, small and medium-sized businesses play an oversized role in building resilience by serving as generators of economic activity, employment, and innovation. This is why Tanzania needs to prepare startups and early stage founders through training, mentorship, and access to smart finance. It is critical that we help funders understand what works and does not work in building successful businesses. In today's session, we'll focus on how, as Tanzania, we can improve access to smart finance while creating a supportive environment for startups and early stage firms so that they can build resilience for future crises. I would like to thank our chairman, Mr. Babas Altuntas, for the confidence he has reposed in me with my appointment as the Tanzania country chair for the World Business Angels Week. I'm also very grateful to all our speakers for their wonderful contributions to the agenda of the World Business Angel Investors Week. Our keynote speaker, Ms. Tusekile Kibonde, the resident underwriter for the African Trade Insurance Agency and a non-executive director of Access Bank Tanzania, and Ms. Judith Minzi, the Chief Executive Officer of K Finance Limited. The keynote speakers will be speaking on building resilient post-pandemic businesses through access to smart finance. Our roundtable discussions will follow, drilling down on the needs startups have and the motivations of investors. We will also have a question and answer session after every panel discussion. I encourage you to ask your questions in the chat and participate accordingly. Without further ado, I would like to welcome our global chair, Mr. Babas Altuntas. Thank you for listening.
dear prime ministers, dear ministers, continental chairs, country chairs, and dear participants. Even before the COVID-19 pandemic, business transformation was a concern of big companies. But now it is imperative, and not just for large enterprises. Even the smallest companies and organizations must transform their business as a matter of urgency in order to cope with dynamics of the post-pandemic business environment. Surveys reveal that most small companies and entrepreneurs in the startup economy are suffering financially. Their plight will become even more serious if they have not been able to complete their business transformation before the new normal sets in. The challenge is this: business transformation is not a cheap process. How realistic is it to encourage entrepreneurs to invest in business transformation when they are struggling just to meet their short-term expenses? Given this situation, as an affiliated partner of the G20 Global Partnership for Financial Inclusion, the World Business Angels Investment Forum invites policymakers to develop smart policies that will provide financial support for startups, scale-ups, SMEs, and all entrepreneurs to help them transform their business. WBAF believes that more public-private partnerships should be mobilized for this purpose, and governmental recovery plans need to include financial support for entrepreneurs' business transformation efforts. Governments must be alerted to the fact that unless small companies receive financial support for transforming their business, they will not be able to survive in post-pandemic times. This means their capacity to create more jobs and social wealth for economies will be lost. I would like to thank in advance all the stakeholders and partners who will be contributing to World Business Angel Investors Week 2022. They will be highlighting the importance of business transformation for post-pandemic times, the topic of this year's event. I believe to grow and thrive in a post-pandemic world, swift business transformation into a pandemic-proof organizational model is vital if we are to ensure the sustainability of world economies in the new normal. I would like to thank the organizing committee and colleagues who will be taking roles as continental chairs, country chairs, global partners, keynote speakers, and panel discussants. Their combined efforts will create value for the world's startup economies, not only during this week, but in the future as well. They will focus on harnessing the collective knowledge of the world's most influential women leaders, policymakers, entrepreneurs, and artists with a view to addressing critical issues of early-stage equity markets in the new normal. This week will be a great platform from which to campaign for solutions to such critical issues and other worldwide concerns at the United Nations, the European Union, and in G20 countries and regional and local economies. World Business Angel Investors Week 2022 is celebrated in 132 countries of 5 continents and 2 regions, with more than 200,000 participants from around the world, 320 keynote speakers, 765 distinguished panel speakers, addresses of 12 presidents, 6 prime ministers, 32 ministers. This is really great. And it is a great pleasure for the World Business Angels Investment Forum to coordinate this particular event of the world globally. The ultimate goal of all of the week's keynotes, discussions, presentations, and workshops is to agree on a common roadmap for entrepreneurs, startups, and SMEs that will enable them to emerge from this pandemic period even stronger than they were before. I have good news, by the way. The next World Congress of Angel Investors will be in person on 25 and 26 of October in Antalya of Turkey. This will be the first global convergence of world investors, public funds, startups, angel investors, wealth management institutions after Mr. COVID started traveling around the world. So I am very excited to see all of you in person next October in Antalya. And our Congress topic will be digital transformation for post-pandemic economies. We will discuss this week business transformation, and we will discuss digital transformation next October in Turkey. And we will collect all our collective knowledge and we'll go on thriving to empower the world economy through innovation, entrepreneurship, and angel investment. I'm confident that each participant in the World Business Angel Investors Week will benefit from the collaborative ideas, know-how exchange, training programs and workshops, and global networking opportunities that are offered. I believe that by working together across borders with a common vision and smart dynamics in mind, we are well placed to bring about positive change in the global economy. Thank you very much for joining our global efforts to ease access to finance for entrepreneurs, promote gender equality, increase financial inclusion, and promote the importance of digital inclusion for post-pandemic times. Thank you.
Thank you very much, Mr. Babas, for addressing us and for taking the time. Indeed, we invite all of you in October for our Global Congress. Without taking much of your time, I would like to take this opportunity to welcome our first keynote speaker, Ms. Tusekile Kibonde. She's the Senior Regional Underwriter for the African Trade Insurance and Underwriting Political Trade Credit Risk Policies in Tanzania, as well as non-member countries. Her responsibilities also include liaising and strengthening the relationship with the government of Tanzania. In addition, she's a specialist in surety bonds and also manages energy sector transactions in all ATI markets. Ms. Kibonde has 13 years of banking industry experience, having worked for the East African Development Bank as a senior investment officer, in which she oversaw multi-billion-dollar projects in multiple sectors throughout the region. Please welcome Ms. Tusekile Kibonde to address our keynote. Thank you.
Good morning, good afternoon, and good evening, depending from where you are logging in from. It is my great pleasure to be a part of this annual event organized by the World Business Angels Investment Forum. I would like to take this opportunity to thank WAF of Tanzania for inviting me to make a keynote speech in this Africa Special Week. As introduced by our host, Tuti, my name is Tusekile Kibonde. I'm a senior regional underwriter for African Trade Insurance Agency. I hold more than 20 years of working experience in the financial sector. Today, I want to share my views and experience on SME challenges and solutions of accessing smart financing in the sub-Saharan region. Small and medium-sized enterprises account for around 90% of Africa's businesses and are viewed as engines to drive forward the continent's economic development. Despite their vital role, about 70% of African SMEs have no access to formal credit. Over the years, this has hindered their ability to grow and innovate, in turn preventing African economies from reaching their full potentials. There are several known factors which affect SMEs' ability to raise capital. I'll address about 3 of them. Inefficiency of African capital market in supporting SMEs. The lack of funding for SMEs in Africa calls into question how well domestic capital markets are serving the needs of these companies, who form bulk of business universe in African countries. However, various research conducted within African capital markets suggests there is a significant lack of awareness on available financial options for SMEs. These range from microfinance, angel investing to venture capital, private equity, and potentially listing on local exchanges. This unfamiliarity has resulted in low level of domestic participation for these companies, leaving local equity markets undeveloped. SMEs seeking to raise capital have traditionally relied on short-term debt, which is commonly viewed as the only viable option. The result is excessive dependence on the banking sector, specifically on bank loans. As such, the financial sector has continued to grow around this common notation, with banks and other stakeholders focusing their operation on bank loans and debt financing. In the context of Africa, the existing businesses environment poses further obstacles to debt finance SMEs. For example, heavy credit checks by banks restricts SMEs' participations. Banks usually would want to assess creditworthiness of companies, while SMEs often lack historic trade track record and meaningful data inputs required. Credit bureaus use very strict tools with high chances of blacklisting small companies when a single loan repayment is delayed. It is also a requirement by most lenders to make sure securities are available to secure the loan. Most of the time it is properties. For example, in Tanzania, the central bank's requirements is to have security covering loans by at least 125%. This becomes difficult for SMEs. Another major challenge worth mentioning is lack of experience and knowledge among African SMEs in successfully running businesses impacts an ability to attract equity capital into businesses. Some of these gaps that SME fails is because they are unwilling to accept external investment and bring in new partner as they fear giving up control of their companies. Unaware of the importance of strong governance and therefore do not put in place a team of expertise in their management structure. Also, SMEs often underestimate the importance of managing talent, meaning to attract, develop, and retain a pool of professionals. Many SMEs in Africa do not have audited financial records. This is known to lenders and potential investors. Entrepreneurs also often lack resources to prepare accurate records or access to external service providers that can assist. The third and last challenge I would like to touch on is minimal visibility to investors. When you have a closer look into African businesses, there are some SMEs described as the missing middle. These are the businesses employing between 5 to 250 people with capital needs ranging maybe from $20,000 to $2 million. These companies are considered too big for microfinance organization, but too small or risky to access sufficient capital from the conventional debt and equity investors. These companies have been identified as facing unique challenges in accessing finance, talent, and market. The impact of COVID-19 pandemic and now the Russian-Ukraine war has greatly enhanced financing gap to SMEs, which is currently estimated to be more than 421 billion in Africa. A number of African governments have undertaken mitigating measures to support SMEs during the pandemic, such as making availability of funds, encouraging debt restructuring, providing tax relief, and credit guarantees. It is also highlight time for the private sector, both the companies and lenders, to use various instruments available in the market, such as credit insurance, to support the sector accessing smart finance. For small businesses, it is more important than ever to protect themselves against the potential domino effect of late payments and customer insolvency. The same would apply to lenders providing credit to SMEs. Credit insurance manages this risk both for companies and lenders. For the SMEs, trading with international market on credit terms may open up problems, such as sourcing financial information on new foreign clients, made even more challenging by the lack of transparency in legal system of foreign countries. The benefits of having trade credit insurance when business is conducted on credit terms include having a cover against late payment. Insurers will cover the company against non-payment by their buyers. For example, exporter of coffee to a foreign market or any other supplies. Should the buyer, in this case, we're talking of a company, not individuals, fail to pay on time, the company will claim for insurer according to the policy agreement. Even after this, the insurance provider will still attempt to recover payment from the defaulting buyer. This cover is available in the market to support supplies to both single and portfolio clients. Enhance credibility. Credit insurance help to support and protect offered by the credit companies with information on prospective buyers that SME business may not have access. An added bonus, it improves business risk rating, leading to potential decrease in banks' lending rates and higher liquidity. Access of inside information is another benefit to credit insurance. Insurers will use various sources to access information in order to analyze credibility of a business of a new buyer. Any negative information established by the insurer implies that the buyer is a high risk to your business, and you will be advised to discontinue trading with that particular customer. Information consultant, this is very well known. Credit insurers are very excellent in providing constant information. They do conduct research on various markets and therefore offer wide knowledge information on changes in legislation, market trends, competition, etc. Similarly, lenders would use the same credit insurance as a risk mitigant against SME default. Also, when SME has insufficient security to cover their loan with a bank, credit insurance is accessible as an additional collateral supporting business so that they can access funding. This solution is only offered by specialized insurers such as African Trade Insurance Agency. The institution works closely with lenders and suppliers to unlock funding requirements by SMEs in African countries. As I conclude, looking ahead, a healthy SME is vital for the economic recovery of African countries. Sub-Saharan Africa alone has 44 million micro, small, and medium enterprises. The sector significantly contributes towards inclusive growth. It is responsible for an estimated 80% of jobs across the continent and promise of livelihood. If we can ensure these SMEs succeed, will have a foundation for economic recovery that can fuel sustainable and inclusive growth in all corners of the continent. Thank you.
Thank you so very much, Ms. Tusekile Kibonde, for your keynote speech. It is indeed very insightful and gives us more points for the other section of our event, the panel discussions. It was indeed very insightful to know that there is the missing middle in the SME or in entrepreneurship ecosystem in sub-Saharan Africa or here in Tanzania. And as we continue the night, we are hoping to foster some solutions on our way forward for these startups and SMEs. I would also like to invite our next keynote speaker, Ms. Judith Minzi. She's the CEO of K Finance Limited. She has been leading the company for over 5 years since the retirement of the founder and now chairperson, Mrs. Devota Minzi. Prior to joining K Finance, Ms. Judith was working as a chartered accountant, and she's vested in the areas of finance, leadership, and business development. Today, Ms. Judith Minzi will be addressing her keynote on behalf of the founder and chairperson, Mrs. Devota Minzi. Please welcome Ms. Judith Minzi. Thank you.
Thank you. Thank you, Tuti, for the warm introduction. As introduced, my name is Judith Minzi. I'm the Chief Executive Officer of K Finance Limited. K Finance is a microfinance regulated by the Bank of Tanzania. We were founded in 2008. So we have been in operation for about 13 years now. K Finance was founded, as mentioned prior, by Mrs. Devota Minzi, who is the founder and first CEO of the company. Being a microfinance, our area of interest is lending. I was very much interested by the first keynote speaker as she was talking about the different diverse challenges that financing is, the different areas of challenges in financing in the market right now. So delving into this subject matter, as a business owner, K Finance is a family-owned company. So also being a chief executive officer, I'm also part of the owners. As a business owner, I understand the financing challenges in two areas. First, we as a company also require financing to be able to run our businesses, to be able to give loans to our customers. But then also, we also stand on the other hand as lenders, where we are considering different proposals from our customers who require financing from us. So one of the common challenges that I would say that comes across to us as business owners and to our customers is that access to finance in our country is quite challenging, because they are quite very important requirements as regulated by the regulator that need to be adhered to, but they are not easily accessible for small to medium-sized companies like ours and like those that we lend to. So finance being the lifeline of any business requires an accessible line of financing to be able to run their businesses. So when a company is unable to have a sure source of funding, then the business's growth will surely be affected. So then came the challenge of COVID, where it made this even harder. So most businesses face, as mentioned by the previous speaker, that one key challenge is that most small businesses do not have sufficient collaterals, they do not have sufficient records, the management is not strong. So when you go to a lender, these are some of the key areas that they consider before they issue funding to you. So if you're unable to meet these key requirements, then of course access to finance would be limited. You would be able to get funding either through very expensive sources, or you'll not be able to get the kind of funding that you really need to be able to run your business. So with all these challenges, when COVID came in, it made this even worse. The global pandemic found us unprepared, and being a small developed country, I think the challenge was even worse for us. So most businesses really suffered. I would take an experience of the businesses that we offer financing to. Some businesses closed because they were unable to weather the challenges. Some lost their businesses completely and had to start over. And some had to be taken into new reconsideration. So for those businesses that had, I would say, a proper management style, for us, we would take into consideration this challenge, and then we would reschedule their loans and allow them more flexibility. But for those that in the first place, their running was a bit shaky, to be able to help them to be able to weather the storm, it was quite a challenging task for us as lenders. So I would say, in order to ensure that we, as a country, are creating resilience to be able to weather such similar challenges that might occur, because the pandemic, this is one time, it could happen again, and the pandemic has not even ended yet. So we are not even sure how far it will end or when it will end. So we need to be able to find measures to ensure that we have resilience to be able to weather such kind of storms. So in talking about smart financing, as mentioned, that the major aftermath of the pandemic was liquidity challenges. And it is worth noting that most businesses either slowed down or closed production during the pandemic, which of course resulted into cash flow difficulties. And a number of businesses went bankrupt and they had no cash to run their operations. And then, of course, it was even harder to be able to access financing from banks, as the banks, of course, based on the regulations that are provided by the Bank of Tanzania, they become even more strict in the kind of facilities they are able to offer to customers. So, of course, in my opinion, I think it's time now the world needs to look at a non-traditional way of financing that we may call, may call it smart financing, and that this financing system would not only stick to traditional yardsticks as monitored or as based on commercial banks. We would say that a new outlook would consider evaluating the strength and potentiality of the idea that is being brought forward, rather than considering the past cash flows, because most of us lenders, we like to consider the past cash flow to be able to see that this business has ability to be able to use that line of financing effectively. So we look at past cash flows and see how this business was run. But then now looking in the future, and we believe that if we look at the strength of the idea and give these people a chance, access to financing will be made easier, especially for startups. But also, we should be able to discount the pandemic period when evaluating the project, as we all know that most businesses suffered, most went into recovery mode. So most businesses would say are starting over again. So if you are offering financing and considering that period, obviously you will not give them funding because you would see that the business basically failed. So these considerations should be made as we evaluate future loans in order to ensure that there is access to financing. But then, of course, another way that lenders could use to ensure that most businesses, especially startups, have access to financing is to take a stake in the project, equity financing, and through that, they would be able to give those businesses more support and monitor the projects in a much closer manner. But then, of course, last but not least, this being the World Business Angels Investors Week, I'm sure this is a forum where smart financing solutions can be born. These are just some of the things that we thought of as a way to share, as a way to share for this forum, for people to be able to discuss further. We're also a global village, so we also need each other to address these challenges together. So when we meet at forums like this and share different ideas, we can come up with new ways that can be applicable and ensure businesses have access to financing. Also, as joint global citizens, we have a responsibility to be able to address these challenges so that access to finance is accessible for all, and all businesses can be able to tap into these opportunities. So it is my sincere hope that together we can, through this forum, the discussions that will be shared here, the takeaways would be a starting ground for smart financing and access to financing for startups and other institutions in Tanzania. Thank you.
Well, thank you so very much, Ms. Judith Minzi, for that keynote, quite very insightful. I like how you brought into focus the issue of alternative financing, that the financial institutions are overwhelmed and not currently serving the SME entrepreneurship ecosystem here in Tanzania. So what other alternative financing can we introduce, and how can we maybe provide a hybrid solution where the startups or SMEs have options to various financing options depending on the stages that they are in their entrepreneurship journey. We would like to go to our next section of the event, which is our panel discussions. And I would like to hand over to the moderator, Ms. Emilia Siwingwa. She will be our moderator for the panel discussions. Ms. Emilia Siwingwa is an advocate of the High Court of Tanzania and a registered arbitrator. She has 20 years of combined experience in human rights, sustainable development, international trade, and private international law. She advises, publishes, and speaks on the same. She's currently based in Dar es Salaam. Emilia is the founder of the African Hub for Accountability and Development Initiative. She's a Pan-African organization cultivating innovative solutions to advance equal opportunities and unfettered accountability in sustainable development. She's also the principal of the eponymous Legal and International Development, which has managed assignments to local, regional, and international clients in respect of market entry and market impact in Africa. Emilia is a fellow of the prestigious Archbishop Desmond Tutu Leadership Program, a fellow of the American Bar Foundation, entry for which is by invitation only, and she was recognized as one of the top 50 women in management in Tanzania by the CV People. She's also the former chairperson of the international non-governmental organization Greenpeace Africa. She's a current member of the focus group for the Ibrahim Index of African Governance, curated by the Mo Ibrahim Foundation. Emilia is a third culture individual and an avid Toastmaster, where she's the incoming District 114 Director, supporting clubs in Burundi, Ethiopia, Kenya, Rwanda, Tanzania, and Uganda. She's an advocate for ethical and servant leadership, and she's driven to empower young women and men to achieve their full potential. I'm excited for the next session of our event, and we are in capable hands. Ms. Emilia, welcome.
Wow. Thank you very much, Madam Chair, for that generous introduction. Distinguished guests, ladies and gentlemen, it's time to get further insights from our panel of experts on this forum's theme, building resilient post-pandemic businesses through access to smart capital. To all of our guests, the Zoom chat is open and questions are welcome. So please, if you have any questions, type them right into the chat. Please also feel free to post updates onto your social media using the handle #WBAF Tanzania, all one word. Now, our first panel topic is designed to help us understand the needs of startups, particularly within the context of the post-pandemic new normal. We have 3 panelists representing startups or umbrella associations for startups. And I'd like to now introduce them one by one, starting with Winula Kingamkono. Welcome onto our panel. He is the co-founder of Ellipsis Digital Company Limited. Next, we have Edie John. A warm welcome to you. He is the Chief Executive Officer of Safari Wallet and the co-founder of My Job Pass, as well as the founder for place-listed kwetuafrica.com. Lastly, we also have Pray God Japhet, who is the program manager at the Tanzania Startup Association. Welcome, gentlemen.
Thank you.
Excellent, excellent. Now, to just get us started and to paint the picture a little bit for our audience, small and medium enterprises are important drivers of growth and provide up to 80% of jobs in Africa. And I'm sure that the dynamics are similar here in Tanzania. So this is an important sector and it needs to be prioritized, and you are experts within this sector. So let's dive right in. I would love for all of you to be able to give us a little bit of background of the work that you're doing. So tell us about your startup or your partners and some of the fresh or innovative ideas or projects that you or they are working on. And I'd love for us to get started with the Tanzania Startup Association. So over to you, Pray God. Talk to us.
Oh, wow. Hi, everyone, and good afternoon, good evening, good morning. As introduced, my name is Pray God Japhet, and I work with Tanzania Startup Association, or TSA, as a programs manager. And TSA is an umbrella membership-based organization, and where we bring together the stakeholders of the startup ecosystem, including the startups themselves, entrepreneurship support organizations, the government, and other stakeholders, such as development partners, to advocate and lobby for conducive business environments that can help startups to start, grow, and scale in Tanzania. And we do this by addressing several, I could say maybe 7 domains or building blocks that influence the performance of entrepreneurship and innovation ecosystems. They are well known across the world, but then we have things like governance, where we look at policies, laws, and regulations. How do they affect startup businesses? But also we look at individual building blocks, such as financing or investments, where we advise or we actually advocate, just as I said. We bring together the government and other relevant stakeholders to advocate for financing instruments or models or schemes that are really convenient to startups or match the requirements of the startups. yeah, and that could be a brief overview of what we do. And we are, like I said, we're a membership organization where our members are startup businesses. And yeah, I'm happy to be in this panel. Thank you.
Fantastic. Thank you, Pray God, for that overview. Quick question, follow-up question to you. How many members do you currently have?
Oh, last time I checked, we were crossing 470. So maybe now we are approaching 500.
Okay, so a sizable number. Fantastic. Okay, so our next panelist that I'd like to throw the same question to, let's go to Mwinula Kingamkono. Talk to us about the work that you're doing in Tanzania.
Thanks, Emilia, for this opportunity. Mwinula Kingamkono is introduced. I'm a co-founder at Ellipsis Digital, and Ellipsis is a software development company, but we also train young aspiring software engineers who then we outsource for European clients and Tanzanian clients as well. And Tunza is and also I work at Tunza. I'm the founder of Tunza FinTech, which is a startup that we launched a year ago. On 16th June this year, we turned exactly a year old. And Tunza started as a personal struggle, and I was struggling with achieving my financial goals. And so I tried different apps, but they were not built for African markets. And so started to ask different people, my friends, in 2019, and turned out that this is a common problem in Africa. And so therefore, in a nutshell, Tunza is an data-driven marketplace, and we accept fractional payments that for now they're being paid upfront for a certain period of time. So think layaway model, and so we onboard consumers and merchants who consumers are buying products and services. You can travel to Ngorongoro, you can buy a TV, you can buy a cell phone for a period of 6 months, and you break these payments in small amounts that you can afford depending on how you're earning. And since we launched, we have achieved over 10 million impressions all over social media, and also I'm trying to get the deck here. We have over 12,000 registered users. We sold to over 700 paying customers, and we are growing. And so yeah, that's pretty much about me. Yes. Yeah.
Wow, thank you, Mwinula. So you are the startup guru, it sounds like, and so we'll be coming back to you to get some specific insights into the shocks that have been felt within the startup industry, as well as to find out some of the successes within this pandemic and post-pandemic period globally. So fantastic, wonderful meeting you. And lastly, let's hear from Edie John. Edie, tell us about the work that you're doing.
Hi, good hello everyone. Thank you so much for actually giving me this opportunity to WF Forum. So basically, what I'm actually doing, I say clearly, is changing the notion of travel for the local Africans. That's pretty much simple. And I speak in a sense whereby I think for decades we can all agree tourism in Africa, or African tourism, it has been highly focused on being promoted to the Western market. We are talking about the Americans, the Europeans, and Asians, and the rest. And it has been a very, I'd say, a long sort of a struggle for locals who in Africa who were looking forward to travel or try to travel to actually acquire or afford to buy just a single experience, whether it's for a family purpose, whether it's for a work trip. It can be actually a headache for one person, a local Tanzanian, it could be for Kenyan, for Ugandan, to just have a simple of a click button and buy a holiday that they want to dream for. So Safari Wallet was actually founded in 2014 with a single idea of becoming a travel fintech that could actually help people to achieve whatever type of experiences they want to buy by a single click, and they can actually pay as simple as possible through installments, mode of payments. And at the beginning of when we were starting actually building this, there was a lot of ignorance in the market. And I think one of the key things to look into here is also the readiness of the market could be important. By 2014, when we came out, we started doing survey and research and understanding what is the biggest problem why Africans are not actually traveling, why are they not affording? Is it the culture problem or is it a cost problem? And I think one thing we discovered and learned from over 1,000 people that we talked to, and this was actually between, we started doing surveys from 2016 to 2017, 2018 to 2020. And we learned one thing, actually, a number of locals have traveled, but the only problem was actually they traveled during their childhood. So they are sort of memories they remember. And whether these trip or experiences were prepared by either school teachers or somebody who, had a knowledge around, but the struggle on their adulthood was actually to navigate around and find a single company or a platform that could actually say, you know what, yeah, we have localized the price for you, we have localized experience for you, and you can buy at any time. So Safari Wallet is basically focusing on actually technology, the finance side of making sure that you can buy anything at any time, any trip at any time. But we also have two models right now. We are offering installments plan for 12-month period and between 12-month period. So you can buy anything in advance and then you can travel. But also we've recently launched the BNP where you can buy now and travel and then you can pay us later. So we are actually onboarding and bringing on the chain a number of stakeholders. This includes from travel partners, local guides who are actually mostly of the people we are looking into in order to actually formalize their job in a certain way where somebody can earn an amount of, cash at any time if they're certified to actually work as a local guide within Tanzania and Africa itself. Our really big focus is not only just to sell trips, our goal is to sell experiences. And when we speak of experiences, we are talking about number of events. This could include people who love marathons. This could include people who love music festival. And I think they have their own type of experiences. You can never sell the same experience that will sell to the Western, to the Africans. So big time, we are localizing, we are changing the notion of travel for Africans, and we are actually supporting Africans to buy whatever they want without a sense of cost, without a sense of, this is expensive, I can't afford. No, if you want to travel, Safari is there to cover you up with insurance and the backbone of other bank financial partners that we have on board for a good goal of changing the notion of travel for Africa. Pretty much that.
Wow, so you are actually catering to a demographic that organizations like Africa No Filter say that is a huge need, but also a huge barrier for African youth. Travel, being able to move from one country to the next, or even one city to the next, is one of the biggest barriers that Africans, and particularly African youths, complain about. It was an idea that with the launch of the free trade agreement, that there's this hope that travel can come to life, and it looks like your organization is catering directly to that. So it looks like we have the right panel of experts here. So let's dive in a little deeper into some of the issues to really understand the needs of startups. And I want to come back now to Pray God. Pray God, talk to us a little bit about the challenges that the 500 or so startup organizations that are your members, what have their challenges looked like during this sort of pandemic and post-pandemic period?
All right, thank you. You kind of took me back because last year during the pandemic, we actually did a survey. We call it a snapshot survey on the impacts of COVID-19 pandemic on startup businesses. It was 2020 actually, yeah. And it gave us a snapshot of what's happening or what was happening on the ground. But when I come to think of it right now, I think wherever that happened during the pandemic was just a revelation of what has been happening to startups. Because if I could just look at one of the findings, it said we spoke to 1,000 startups, but also not just startups and small businesses, SMEs, sorry. And so we had a combination of both startups and the SMEs in this survey. And it says one of the findings was 42% of startups, no, I should quote this one. It says 70% of startups are facing difficulties to cover operational costs. But also one of those, it says 42% of startups are in what we call red zone, with 4 months of less cash runway left. So, but then at that time, it felt like it was just something that was induced by the pandemic. But when you come to look at it from the financing point of view, the red zone or the value of death, I think most of you are familiar with that terminology, with those terminologies, is something that startups really face. I came to realize about this last year, 2021, when we did our mapping, a project we called Mapping the Startup Ecosystem in Tanzania, where we try to see where are the startups getting financing, where are the which stages are most of Tanzanian startups in. And we realized that over 50%, actually 60% of Tanzanian startups are in idea stage, and other have just progressed a little bit past the idea stage. They're in early stage. Very few are in growth stage, and even fewer are in scaling stage. And when we try to look at that, we come to realize there's a huge disconnect. It's not a new findings, something that have been there actually. There's a huge disconnect between the finance that they need and the financing that's being offered by the institutional investors and the investors. So what I mean to say is the challenges that startups faced during the pandemic was just an amplification of the challenges that they have been facing. The death of Valley was the percent of startups that could die was even higher, but it's always been high as compared to other large businesses. So I would say these challenges, the pandemic didn't really bring new challenges, but it helped us to see the existing challenges in a higher magnitude. And I could share the report that we did with everyone. You could see some of the findings were interesting, but the bottom line is like everywhere in the world, the startups were suffering actually, but then there has been a good pickup from there, but challenges are still the same. And if we are addressing those, we should not just address them from the pandemic perspective, but from what they really are.
Great, thank you, Pray God. So essentially what I'm hearing from you is that the only thing the pandemic did for Tanzanian startups and small businesses was to reveal challenges that already pre-existed the pandemic, which included access to finance, as well as the ability to transition from a growth to a scaling organization setup. And just to clarify for those of you who are not from investment backgrounds, the Death Valley startup talks about the company's Death Valley curve is the span of time from the moment it receives its initial capital contribution until it finally begins to generate revenue. And not all companies are able to survive that period. And what I'm hearing from you, Pray God, is that a lot of Tanzanian small businesses and startups don't always overcome this valley. Okay, so maybe just to hear a little bit more from those of you who are actually running these startups, anything that you can add around this issue? Let's start with Winula. What are some of the challenges that your organization faced? And you train other people as well. Maybe what other challenges Did you have to help people with knowledge transfer? Talk to us about your experiences over the past 2 years or so.
Thank you. Just want to touch two things, uncertainties during the pandemic and the opportunities afterwards. And during pandemic, Tanzania was one of the countries that never really closed the borders. So in a sense, it was business as usual. And of course, even though at that time, there are some people who were, of course, they held back, and there are some companies that started to work from home, and all this transformation that saw the entire world quickly move into digital space. I mean, having been working like professionally in IT for the past 10 years, I can tell you one of the most difficult things that we had as IT guys, how you like to call us, was transforming people into digital space. Nobody wanted to use software. Everybody pretended you can't hold meetings until we meet face to face. Everybody kept saying, we can't use this type of software. I have to print this to do that. And then all of a sudden, banks were running from home. Customer support was running from home. And that uncertainty posed as an opportunity for most folks in tech, because then all of a sudden we're in demand. Can you tell me about that software that you kept saying that you can do a meeting while you're at home? I say, you mean Zoom? Yes. And so this happened at a very short time. Even in Africa, we saw the adaptation that was swift. Nobody thought it was possible. But all of a sudden, these corporations that once thought that they could never run remotely started to understand that. And my core business, which is Ellipsis Digital, is literally, we were preaching remote working before the pandemic. So you can imagine, like, not so many people understood this concept. But then we started to get attention from other companies, because we understood this type of business. We were in it before it became a hit. And we were already working on these articles and stuff. And so we started to get emails, and we started to get clients from different parts of the world. And so this is the opportunity part after the uncertainty. But, for some startups, they actually won, like Zoom, for example, the one that we are using. And I think we started to see companies in Africa that also started to win in this similar context. We started to see delivery apps starting to pick up again. And I'm talking like local apps like FoodSAS and stuff. And we started to see so many people who, now they have to work from home. They started to pick creators' role, like they would start to learn how to paint again. We started to see so many people creating. I think we saw TikTok picked up around this time. And then we started to see so many things. People became content creators. And some of them, we even call them TikTok stars to this day. He was this guy who was usually doing this with his hands. It was pandemic, the result of pandemic. And even in Tanzania, I think the guy's name is Baraka, if I'm not mistaken, he's doing TikTok videos in Maasai outfit. And basically, it was the boundaries that kept people back were gone, and people started to use tech, how tech people tell you in their decks, And yeah, so as a startup, around that time is when I had most of the time that I started to work on Tunza. I started to just go through different ideas. It was easier to run surveys. It was very easy to send somebody an email from Nigeria and ask them to do a call with you for 15 minutes. It was normal. It wasn't a big deal. People get used to it. So I think that also opened doors for local startups to reach out to the global pool And yeah, so people started to basically build products with teams across the globe. I think I was working with guys in Canada, they're Tanzanians, and and that was very interesting itself as an experience, like discovering like there's so many other people who are basically amazing and they do an incredible job. And I think I was meeting Edie, and this is the uncertainty time. We were playing basketball together. We were, bouncing ideas. We were just talking, like trying to figure out, like, what's the next thing. And as you can see, I just said we are playing basketball together. So for us, it was business as usual. And but then it fortified our ecosystem, our industry. As tech industry in Tanzania, because we started to see more products that came out from this period, like these 2-3 years. We saw so many people started to launch, and like even people who, like, because I know Safari Wallet for like years, but then it was like, because everybody wanted to travel after pandemic, and then we see people like easily picking up products because now they understand that tech is actually friendly, and like now people stop even to ask you questions because hey, finally they can Google on their own. So all these things that happened around that time for me, as a person from tech, it was a very crucial point for our industry, but then it posed so many opportunities for founders and people in tech in general. Thanks. Yeah.
Fantastic. So although there is this uncertainty cloud over this particular industry, I love that you have spotlighted the opportunities that have come up through the pandemic. And you've spoken about this transition into the digital space that allowed people like you to help others pivot into this new normal. And you've talked about tech adaptation in Africa, which was unexpectedly quick for so many people. You've talked about product innovation and content creation, which you're right, if you look at it 2 years ago, wasn't there. So wonderful. Those were some of the opportunities. Now, Edie, you work in an industry that was directly affected by the pandemic. So I'm curious to hear from you what the challenges you faced, how did you pivot? And maybe as we segue into the next component, if you talk about maybe what are some of the structural or operational changes that you had to adopt in your business?
Yeah, I mean, Unu has said a lot, but I think I'm going to urge. First of all, when the pandemic hit, it was a moment of a pause for everybody. Like we have to, it's like a 5-second rule when you drop a food, and then you either pick it quick or you just, decide whether you're going to leave it down. And for us, I remember myself sitting in my office. This was April 2020, and my team, all of them, they had to go. Just think about that. The stress. Maybe this is our death. Maybe we are on the last space of survival. But the thing is that as we are sitting down, remember, Safari Wallet's not a new idea. Even Unu mentioned it. Like we started talking about Safari Wallet somewhere 2016 after we formed in 2014. But the market, the stakeholders' acceptance, it was never there. Everybody was like, no, Africans cannot travel. They can't afford to do it. To operators, you try to pitch them, they're like, no, we're not dealing with that market unless it's low season, unless everybody was ignoring this market, which right now, as I speak to you, we have at least 26 African millions middle class who could actually afford to travel for intra-travel. And I say specifically 26 million middle class who are interested to travel. Just think of that market that we never touched. We never even thought we could actually think. As a design thinker and a critical thinker, I don't think within the same box. So I've been thinking about that box for a very long period. Now, pandemic was actually turned to become a blessing to us. This is the first time I'm invited to a call with UNDP so we can talk about Stay Africa tourism. After they just saw us talking about Stay Africa tourism, they're like, hey, can we go on a call and talk about this? HDIF joined us, Deloitte joined us. We had this a period of 6, if not 4 months, just talking on validating the idea or what we're building, and we had to stay quiet so the stakeholders themselves could speak about the opportunity for Africa, for Africans, which basically, if I compare, I remember UK, they gave out a report. They were like declaring that because of COVID-19, by end of 2020, they ended up, if I'm not wrong, you can correct me, they ended up losing about $36 million on local tourism. And I'm just thinking, you want to retain Europeans to come to Africa? It's a lie, but you can retain Africans to travel within Africa. And that's where Safari Water started, capturing the attention. Now, we won on the same year, we won an award in Estonia. Imagine, we were participating on a competition with 700 startups between Europe and Africa, and we came out number 5. For us, that was actually a social proof. Whatever we are building is not only for Africa, it's probably for the larger market, but we are starting with Africa and then later we could grow. And just to focus on one particular sector, travel, experiences, how can we change that notion and then later we can see, and my goal, I'm thinking after COVID-19, a dream came out like, you know what, Safari Water should become a platform that can give insights for locals, like the insight market. What are the best things to give locals? What are the best interest local ones? But speaking of the same thing now, tour operators, they started accepting us. Now they're like, hey, how can we, we started seeing local company promoting a number of experiences to the, social media, Instagram adaptation, whatever that they thought it was the best way to remain resilient, not to die. But we are talking about the really challenge right now. When the pandemic hit, a lot of jobs were lost. Small, medium tour operators, they had to close down. Not everyone had a financial backup. Don't speak about startups only. Even the bigger company that had number of loans and whatever the financial channel that they used to survive was actually hard. I've seen companies that have at least 100 cars going to shut down and zero and close, everything. I was in Durban last month, and I remember one of the hotel, Hilton Hotel. This hotel can carry at least 600 people, if not 1,000 people on a single day, and they declared, we are closing. So just think about that. Now, if you just sit down on the back and ask yourself, if we prepared ourselves 2 years or 4 years ago before the pandemic and just building up a culture for African, to travel, what would have happened? And I think, I'm sorry to say, COVID-19 at some point was actually a blessing to change us, to basically tell us, you know what, do not stay within your box. Right now, what you have to do is just think of the box, go back home and grow up domestic market, because you need it all the time more than how you need the international to come in on board. And that's basically a few things that I'll say for us, as much as there were challenges, yes, for Safari Wallet, we've been having challenges for a long time. Number one, not being accepted in the market because there's that ignorance. And the second thing is that COVID changed that, but also goal now is like, not only we are a marketplace that, want to just save the African market, but rather also becoming an economical recovery platform for the local operators and stakeholders. We are talking about embedding everyone, insurance, travel, within our platform. You're talking about finance within our platform. You're talking about travel events, speak about people creating whatever they want to make sure that we're creating a room for people to have memorable experiences and exposure. Because when you travel to one city to another, basically you're even, putting yourself into, a chances to learn and learn and learn. So for us, COVID-19 was a hit. Yes, it affected the sector, but it's a reminder for the sector itself to change. To become resilient, we have to localize African tourism, and technology, finance are the key things that we, really, really appreciate.
Thank you for sharing that, because interestingly, from a global perspective, the issue of localizing services has been prioritized. When you look at what's happening, for instance, in North America, the localization of services, because access to global supply chains became a problem during the pandemic, is interesting. So I am interested to note that the travel industry, through innovations such as yours, were able to start thinking and operationalizing from that angle. Interesting. So back to you, Pray God, very quickly, speak to me a little bit about some of the operational and structural changes that you are aware of that startups had to undergo during the pandemic. Please unmute.
Oh, okay. I didn't realize I was muted. So in our report, actually, we had a section of actions taken by startups. And when I'm looking at it, it says 46%, almost 50% of startups were planning to cut costs aggressively, but also 27% were planning to temporarily shut down. And that gives you a picture of which is 46 plus 27, it's almost 80% of startups were responding to the pandemic. So I'm telling you that from numbers, but that's like 2 years ago now. We have seen some of those startups because the most that were affected are those that did business depending on the population, like when people come together, like those that were serving hotels, restaurants, and whatnot. We have seen them pick up. I know a couple of some that are still operational to this day, and they're actually growing and hiring more people. So I could just say they've been adjusting with days, given the opportunities that comes with the pandemic slowing down.
Interesting. So this is a great place for us to once again segue into a wish list. If you had carte blanche, a whiteboard, where you could come up with the top 3 things that a startup needs today, please talk to us about that in about 90 seconds, so 1.5 minutes, and include any sort of wrap-up statement that you want to give with that. So we've discussed where we've come from, what we do, the challenges we faced during the pandemic, some of the changes we've had to adapt as organizations. So now talk to us. We're now here, June of 2022. What does the startup community or small business and medium enterprises require at this point in time? Talk to us, and I'm gonna go back to Winula. You're gonna start us off. We're gonna come to Pray God, and Edie, you're gonna close us off, and we're gonna take some questions that have already started coming in. Over to you, Winula.
Thank you. What does a startup need? Money.
Obviously.
So on a serious note, like 2 weeks ago, I think, I wrote on Twitter on the progress of Tunza and how far, we have come since we started. And I outlined specifically that currently one of the biggest challenges that we have as Tunza FinTech is the fact that we have consumers who are looking for different types of products, but unfortunately, we don't have that many businesses, and the businesses that we have on Tunza have limited capital. And then somebody sent me a message on Twitter saying, hey, hi, I just read your tweets, and I think I can give you like training, so think capacity building, and in return, you can give me some shares. And I was like, that's not what I asked. I clearly said we are looking for more businesses and more for the businesses that are currently on Tunza to be able to to increase their financing. And I made a call to banks and financial institutions, who most of them have reached out, and we're in discussion. But this misunderstanding in startups is sometimes very interesting, because it's almost intentional. For example, I was in discussion with someone, and he reached out because he wanted to invest, and he was curious about that. So I told him, like, we are looking for this amount of money. Tell me, why did this guy send me a message saying you put 1 million to 3 million Tanzanian shillings in return of shares. And I was like, bro, like what are you even talking about? Like, do you even know how much does a developer cost in Tanzania? What are you talking about? And he wrote in this message that he's currently talking to other startups and they just signed the deal. I'm like, yeah, whatever, man. Like, so does Y Combinator. So like, but then you start to understand that like it's almost intentional, the misunderstanding of African startup founder. So it's very clear, like the issue is not good ideas, because people have great ideas. The issue is not products, because the same African founders that you say do not have capacity apparently are building products for UK and US markets. And people are very straight about it. Like, hey, I'm stuck here right now. My problem is funds. I want to be able to hire more engineers. I want to be able to, reach out for more people. And somehow people pretend like this is not the problem. Like, listen, the problem is you don't know how to use money. Bruh, you came to me when you see distraction and everything. It's almost an insult to go to a guy like Edie and tell him like, hey, you need capacity. He's been doing this since 2014, for God's sake. So for me, I think I encapsulated the frustration like of what the startup founder needs. But more importantly is let's stop pretending that we don't know what African founders need. And this is why I'm very happy to see programs like Funguo who are actually giving people money, because this is what people want. So for us is, mostly is that, like, please, the problems that you have as policymakers, as, I don't know, like in these associations and organizations, it's the same problems we have. We all need the same thing. So what we need is more funding opportunities that are directed to these products. And I'm not talking about like these tickets that go like $500, $1,000, because you know for a fact that even for an organization like this one, this won't cut it. I mean, yes, you pay for servers for 1 month, but then what? You're back again. So for me, it would be that more funding opportunities for Tanzanian startups, more funding opportunities for African startups, because we know what works and we've seen what actually can change, and this is what we need. Yes.
Wow. Okay. So you're pushing back a little bit, because the World Business Angel Investment Forum speaks about smart finance, and smart finance isn't just cash. It's also that opportunity for knowledge transfer in different spaces. And I would push back a little bit and say, surely we don't know everything, because if we knew everything, then our ecosystem would be more competitive than it is right now, right? So, but I hear you. Financing is required. So pray God, as you speak to us, I'm curious, are there any, there's a question that came in and I want you to be able to respond as you conclude. What are the financing options that you're seeing for startups as you conclude in terms of, your wish list, your top 3 things, but are we seeing financing options for startups?
Yeah, it's evolving. Just as Uno said, Funguo recently launched their investment vehicle, if I could call it that, which is more of what we need. And I'm glad they are doing it. At least the ecosystem and other players will realize that we need, and even the government will realize that we need more of this. But on my wish list, one of the things that I think is key to unlocking the potential of startups in Tanzania are policies and laws and regulations. Because when you look at financing, it all boils down to policies or laws or regulations. When you look at skill sets, when you look at entrepreneurship culture, whatever domain of the entrepreneurship ecosystem that you pick, it boils down to policies. We want to get more financing to Tanzania, whether UNO is fundraising from abroad or anywhere. An investor is going to look at him like, how can I get money into Tanzania? How will I exit? There are reasons Kenya, South Africa, Nigeria, and Ghana lead in attraction of financing in Africa. Just look at their policies and regulations around those areas, you realize that it's not just that people wake up and say, I'm going to put money in a Kenyan startup and not a Tanzanian startup. They actually do an analysis of how is it to get money in and out of Tanzania versus Kenya. So I would say, to be very realistic, it's very clear that we expect most of our investments to come from abroad because of our culture. We do not come from, we are not a business-led country, you know, we come from socialism. So people, it's not our culture. People would not bet, like somebody who has just retired would not bet his 100 million Tanzania shillings on UNU, but they would rather go buy daladala, like the matatu, I don't know, should I call them in English? Yeah, they would rather do that than put the money on UNU. But by UNU, I mean Mwinola, sorry. Yeah, and when you're dealing with a population with such kind of history, I think it's more important to encourage investments to come from abroad. We cannot wait for our population to learn to invest in our startups because the startups will die. We need to find who is ready to invest and unlock the potentials for them to put money. So my wish list, I think I will put the policies, laws, regulations that can actually attract financing and other inputs that we need for startups to scale. Thank you.
Wonderful. You guys are doing my work for me. You're transitioning us beautifully to the next panel. Edie, I'm giving you 90 seconds. Your wish list, speak to us maybe even about any financing options and opportunities that you've experienced as well. 90 seconds.
Big time. So quick is, I'll agree with everybody, access to funds. And I just want to add, not non-compete funds. We don't want to walk into competition funding or grants kind of funding, because imagine how are you competing with other 10 startups that are actually better and good as you, so you can fight for $5,000. I mean, it's a waste of time, to be honest. It's a time where also I'd like to see a number of knowledge transformation to those who call themselves investors. We have people who call themselves investors in Tanzania as angels, as Unu said. Somebody brings you a 50 million Tanzanian shillings and they say they want 70% equity of your company. That means this person is not even knowledgeable about what it means to invest on a certain startup. Okay, I'll give you a good example. Right now, we're supposed to expand to South Africa because some partners in South Africa, they think we should put Safari Wallet on the Southern African market. But if we had $2 million today, that would have been next week. You understand? So that's really important. Another thing that I would like to mention, which is very crucial, is the joint venture and acceptance of collaboration with the giant organization. And I'm going to speak, it has been a struggle, for example, to just get a single bank to accept Safari Wallet as a partner, and that period has to be 2 years. I mean, these private sector also need to collaborate in order to make things happen, because sometimes it's not only funding that is a key problem, but rather how can I access the market base that a certain bank who's my partner has. But when we go to the table of discussion, signing NDA, they disagree. They're like, oh, and probably later you see somebody doing a big organization actually trying to do what you're doing, which you always say it's okay for you to do until you fail. And definitely sometimes you have enough fund as an organization, you will fail. But you also need startups, because we have sort of a different type of thinking, because we are coming from the lower level and we are going up high. So collaboration is key, access to fund, not just competing grants, but rather having VCs, and we can be backed up as other organization. And I'm going to add up by saying this. Imagine Nala, run by Benjamin Fernandez. In Tanzania, they failed to raise funds, and they managed to raise $10 million away from Tanzania. Why are we sleeping? What thing, why are we so blind? And I want to also argue to my country to lose the guards. There should be jealousy that Kenya South Africa, Nigeria is receiving more funds. It's like sometimes it could be actually not a problem for startups, but rather it's a policy problem that if you just unlock it, there are people who come to build capacity and train founders how to be not investor ready, but we are giving you fund and we're making you ready for the next raise. Thank you so much. That's all I can say.
Wow. So much knowledge, so much experience on this panel. We could go on for 3 more hours. Unfortunately, we're out of time. But Edie, as you were speaking, I saw Winula thanking you that you were raising pertinent points. You have raised important issues that I hope our next panel will be able to address. So a special thank you to Pray God Japhet, Winula Kingamkono, and Edie John. You've been fantastic. Please feel free to stick around because I suspect there'll be interesting questions coming up after this second panel. So thank you all. And at this juncture, allow me to introduce our panel of investors and investment advisors. And we're going to start with Alpha Marwa, who is the managing partner of Vervet Global Advisors. Warm welcome to you, Alpha. Next, we have Francis Omorigi, founder of Innovate Ventures, and he's also a consultant of the European Business and Innovation Center Network. A very warm welcome to you. Next, we have an international lawyer and the director of Shikana Group, Amne Swedi. Welcome, Amni. And finally, someone whose organization and funding vehicle has already been mentioned. We have Joseph Manirakiza. Welcome to you also, Joseph. Fantastic panel. You've heard the wish list from, from our startup representatives. And I would now like for us to focus a little bit on this novel ecosystem that we have here in Tanzania and how you, at the front line of development and innovation through financing and advising, are observing the changes that have been happening through the pandemic and up until now. And I'd love for you, first of all, to just tell us a little bit about yourselves. How are you uniquely positioned to understand what motivates the investor, either generally or in Tanzania? And in other words, just tell us about yourself and the work that you do. Let's start with the lady. Amni, let's start with you. Over to you.
Thank you so much, Emilia. Yes, so I'm really happy to be here. So I think why I'm uniquely positioned is because I work with investors. So my company, Shikana Group, where I'm a managing director, we advise investors, but mainly foreign investors who are investing in Tanzania and the East African region. And one of the areas that we really focus on and we do a lot of work in is private equity and VC, which is a more advanced class than angel, but similar principles. So yeah, I would know. That's why I think I know how investors think and what they look out for.
Super, thank you, Amni. For sure, you are an expert in this field, and I'm looking forward to hearing your insights in the next few minutes. Let's go over to you, Joseph. Your organization has already been mentioned. Talk to us a little bit about Funguo Innovations.
Yeah, thanks, Emily, and thanks everyone for having me. I hope you can hear me. Well, a Funguo Innovation Program has been mentioned. This is a UNDP program that came to light late last year. It was basically replacing another program that had been running for quite a while, HDIF, that actually was also mentioned by another colleague on another panel. So what basically aims to do is to address some of the issues that have been identified as holding back the startups and innovative SMEs in Tanzania. The issue of access to finance has been mentioned quite often, and that's actually the biggest issue that everyone is talking about. But we look at the issue of access to finance not being just isolated issue, because you can bring in Tanzania as much money as you want. If other issues in the ecosystem are not fixed, we are not going to solve the issue of access to finance, or maybe we are not going to solve to make sure that the startups are actually competitive and can actually scale. So there is the issue of the policy that TSA has actually said that they're trying to address. And in addition to just providing access to finance to de-risk startups and innovative SMEs, we are also supporting efforts of all the players in the ecosystem who are trying to advocate for better policies, because that's actually the key ingredient, which is going to make sure that all the tools within the innovation ecosystem can actually work in harmony and be able to make sure that our startups are actually competitive and can attract external financing and be at the map together with the so-called kings that the other speakers mentioned. So that's the contribution that the Funguo, UNDP through Funguo is trying to do to support the efforts of make sure that at least we have a more competitive and vibrant innovation ecosystem in Tanzania. Thank you.
Wonderful. I now understand why you were mentioned. Now let's come over to Vervet Global Advisors. Alpha, talk to us about what you do in this space.
Yeah, so thanks for the opportunity again. I'm similar to Ahmed, I'm not a legal person. I advise local and foreign investors coming into Tanzania, help them with setting up here, finding the right partnerships, be it through acquisitions, be it through mergers, be it through
Alpha, I seem to have lost sound for you. Am I the only one?
No, we lost him.
You were very clear when you started and then nothing. Can you try again? All right, not hearing you at the moment. So let's go to Francis as we sort out your tech. And Francis, talk to us about what you do and how are you uniquely positioned in this space as either an investment or an investment advisor? Please unmute.
Hi, everyone. Thanks for tuning in. This technology stuff. I work with Innovative Ventures primarily. So what we do is we actually run a micro venture fund where we put in a micro fund into some startups. And we don't just want to provide funding. We also the bigger element of what we do is capacity building. We want to be able to help build capacity, a lot of venture development, building capacity of the team, helping them to go to market, helping them to actually commercialize very quickly. And then they can be able to use the small funds to be able to scale. And one of our biggest value proposition is, further connection to bigger investors like the VCs and all that. So that's like what we do at Ventures. Otherwise, I still work with our Angels Network, which is called Serengeti Business Angels Network, which we recently launched in December last year. So our goal is to be able to bridge the early stage gap. I saw some of the founders talking about not having access to very early stage funding. Sometimes VCs come into our ecosystem, they bring very big ticket sizes, and probably looking at the maturity state of the startups in Tanzania, they really need maybe smaller ticket sizes from 20,000 to 100,000. And that is, we feel like we have capacity locally to groom angel investors and be able to fill in their gap. That's what we launched last year, and we actually have seen very big interest from local investors and joining the network, and we are already aligning with deals with some of the other networks like Victoria Angels and Ziban and all that. And then I'm also working with the European Business and Innovation Network on an EU-funded project as a project consultant. It's a €5 million project that's focusing on building capacity of innovation and entrepreneurship in Africa. So that's what I've been doing so far.
Super, and if I'm hearing you correctly, you're hailing from West Africa. So I'm looking forward to hearing some of the West African perspectives as well. as we speak. No, it's part of the setup of the questions. And I think it'll be important for us to be able to do a comparative analysis about this ecosystem, since you also have some of the East African experience. So let's circle back to Alpha, and then let's dive right in. Alpha, is your tech up?
Can you hear me now?
Super, we can.
Perfect. And I was saying I do assist local investors to invest in capital markets as well. So stocks and bonds, the DSC, we advise on that as well. But primarily what I've done for the past couple of years is really look at how to push deals forward, using mostly foreign investment. We have a lot of deals that we've seen across our table in the past couple of years in a variety of sectors. So we're just trying to see how we can fine tune them to be investment worthy and kind of get capital into the country, basically, in a nutshell.
Super, thank you for sharing that in a nutshell, because we are starting to run out of time a little bit. So let's get right into this. And I want to circle back to you, Amni, because an important point was raised. And I think this is a good starting point, because I believe Funguo is also dealing with this. The issue around policies, laws, and regulations. Talk to us a little bit about what makes Tanzania an attractive destination, and perhaps what makes us less competitive when it comes to other economies. And the issue around de-risking investment is critical in your response, because we are seeing in countries like Malaysia, angel investment incentives that give investors tax breaks. So what is and isn't happening in Tanzania from a legal perspective?
Thanks, Amelia. Okay, so I think that in the previous panel, there was a speaker who spoke about the opportunity in terms of the numbers when we look at SMEs in Tanzania, and it's quite overwhelming and it's in millions. So the opportunity lies in, people, entrepreneurs, companies that are being set up every day that, are having ideas that they want to bring to the market, already in the market. And so there are opportunities for investment. But I think Tanzania is one of the less friendly markets for investors, just because of several things. First of all, I think that it's definitely changing now, but I think that a lot of the authorities or institutions, government institutions that are in charge of making policies still need to get their head around the development story of Tanzania being led by private sector development and investment, and not what was going on for a very long time, pre-liberalization and also post-liberalization, which is more aid-funded kind of work. So when we're looking at de-risking, I've been seeing some of the topics that have been going around where people are talking about having these national funds, that are going to invest, but I kind of feel like there's some low-hanging fruits that exist that could really improve the environment. So for example, angel investment is essentially investors that are friends, family, and fools, right? That are investing, and the ticket sizes are usually, a lot less. So the government, for example, could have policies in place that could really incentivize these kind of investors by providing perhaps tax incentives, or even providing tax incentives, for example, whereby at the moment of exiting the investment, capital gains is not going to be paid, for example, or that the dividend yield, for example, is not really going to fall on the shareholder, but more on the company. Things like that could incentivize a lot of individuals that do have money in Tanzania that are not foreign investors, but local investors, and that have an appetite to invest. But when they look at dealing with all the regulatory and compliance issues around investing in a company, because our policies are not quite right or quite conducive, versus just going and getting a piece of land and investing in that, the choice is going to be like, well, let me do that, So I think that the government, or the policies really need to be worked on to really encourage angel investors, And even the previous panelists were talking, I mean, everybody is just talking about access to financing, and it is a major issue, right? So one of the ways that governments can encourage financing would be to actually provide for incentives, so basic things like that, I think that could go a very long way in encouraging investments and improving the investment climate in Tanzania.
Thank you, Amni. That you provided some insights into the sort of policy shifts that are required in order to make the Tanzanian ecosystem more competitive. You've spoken about tax incentives that could be applied to ensure that we're attracting, I think, more useful types of investments into the country. So Alpha, I'm curious, when investors come to you and they say, we want to enter the Tanzanian market, we see the likes of Edie and we see the likes of Kingamkono, and we want to come in and invest in their services. What is it that you're able to tell them that attracts them into our market? And what is it that you're hearing that makes them a little cautious?
I think the panelists already said this before. Of course, the interest is there. Tanzania is a great economy, stable political, no issues, political violence, a relatively smooth transition of power every election cycle. We have a great coastline. We have all the boxes are checked off except for one is, which is kind of a crucial thing actually, is understanding how the policies affect, capital flight or, people recouping their investment. If I invest in Tanzania for the next 5, 10, 20 years, I want to be able to get, at the end of that 5, 10, 20 years, I want to be able to get my capital back out of the country, making sure that whatever I've brought in goes back with me if I'm not from the country. And if I am from the country, how can I benefit from an incentive in using my hard-earned capital to invest into a startup or an SME? Like Amne said, the first thing would be for, tax benefits to those who are coming in, not the foreign, but locals who are trying to invest in those companies, giving them sort of incentive to where they feel empowered to do so. Secondly, I think you're looking at issues of continuity, like what I think one of the panelists said this earlier, as far as business continuity is concerned. How do you ensure that the person I'm speaking to right now as a business owner, in the next 5, 10, 20 years, once they leave the company, they've set a sort of a track for succession rather. What's coming in next. They're well groomed. They understand the ins and outs of the company. They bond to the long-term vision of the company, and they're willing to take on that challenge going forward. That's the level of stability people want to hear about, kind of want to engage with, which we don't really have that story just yet because we're still a small, quote unquote, small nation, young nation rather. There's not been a company that's been around for the past, I would say, 70 years to look at the track record and say, oh, we've had the father come in, now the son runs the show and the grandson's next in line. We haven't had the hierarchy yet, but I think that it's a discussion needs to be had right now to sort of spur investor confidence on, to kind of bring people in to kind of see, okay, there's value in coming here in the long term, not just a short term win. So those are the key things for me. Just to add on to what I'm necessarily about policies, the main thing you can do to instill confidence in investors is creating a stable environment, which means the banking sector, the insurance sector, the tax sectors all must have sort of speak the same language to welcome people to come in, be it local or foreign. There has to be some sort of cohesion across the line on how we address businesses coming up, address SMEs coming up, addressing startups, how they raise capital, and how do you empower them to take the mantle forward. So I do agree with what she said about the policies reform. That's crucial to me, and I think that we can do a lot of work on that.
Okay, useful insights, adding another layer from Amni. So I want to come back to you, Joseph. And the question I have for you, being in this space where clearly entrepreneurs and startups are looking to fungua innovation, and I want to put to you, how can we reduce the disconnect between the entrepreneurs and the investors? Taking into account, feel free to take into account what Amne and Alpha have shared, but I'm curious, as someone in your position, how would we reduce the disconnect?
Well, that's actually a very relevant question, especially if you look at the case of Tanzania, where we are talking about the need for funding for startup being very crucial. If you ask some people, they tell you that the money actually is not a problem. I always say that it could be there, but if I cannot have access to it, then it's a problem to me because I cannot have it as a startup when I need it. Because you could talk about the kind of money that you're talking about, which it goes to Kenya, Ghana, whatever, from the VC, VC money, but which is not finding its way to Tanzania. So the big question is why? I think Alpha and Amni have touched on part of the story, but there's also still an issue of creating a critical mass of startups that are actually attractive to this kind of financing. We don't have that. So that's why we're talking about de-risking that, okay, how can we, like some of the funders or some of the players within the space can be able to use at least catalytic funding to de-risk these startups so they can become attractive to this additional money that we are saying that's going in elsewhere and not coming to us. So that's going to, of course, that's just one piece of the whole puzzle. So if you can be pushing for better policies and better incentives, but at the same time, also working at de-risking these startups that are already available, but also encouraging and building a better pipeline, which is going to evolve into those that become attractive to other investors, impact investors, or even VC. I think that's going to go a long way. And that's actually what we're trying to do at the moment. I mean, people talked about the call that we just launched last week, which is trying to provide some catalytic funding and basically targeting startups that are looking to become much more attractive to additional investors, because that's what we want to do. We just want to unlock the potential for the startup and innovative SMEs to be more attractive to additional investors, whether they are from Tanzania. I'm talking about the commercial banks who refuse to give money or to invest in startup because they are too risky. So the value proposition we are talking to them is, if we can put the first loss to them, can you consider investing in these startups? So that's actually the kind of value that we're offering to the ecosystem. So it's the first call. We want to see what's out there. And so if we get a critical mass, we can actually take that and make a case to other players that, okay, actually there is huge demand into this space. There is actually money that can be made. They are not only looking for grant. We are using grant mechanism to be able to de-risk, but to make them more attractive to commercial investors.
Excellent. Listening to you, I suddenly got this response from our investment advisors, and I want to start with Alpha. And he wants to respond to this issue of creating a critical mass. And Joseph, you spoke about how creating a critical mass can actually create a positive value proposition for investors. So Alpha, what are your thoughts on this?
So I'm not opposing what you're saying, Joseph. I just want to add on to that. I think critical mass is crucial, yes, but I feel like if you build, for example, if you have 1 or 2 or 3 large unicorns that actually add value to the ecosystem that justify investment in Tanzania, in this Tanzanian startup space, it snowballs the effect forward. For example, you had Cellcom, which is one of the, well, wasn't really an investment opportunity, but it's to me one of the quote unquote good stories from the Tanzanian startup sector. You have, of course, Nala, which is the recent one we've had so far. And like the previous panelist was saying, we didn't get much traction locally with Nala, but the value proposition was valid. Nala as a company has a valid value proposition overall. That was not only on Nala, it was more on financial awareness and financial literacy in Tanzania to understand the value of that product and how it can benefit them as investors in the long term. So critical mass is a good point, yes, but I feel like creating the right stories around the 2 or 3 key startups that have gone through, bootstrapping to being self-funded to being revenue generating, pushing more of that agenda is, to me, a better way of snowballing the effect, I think. So yeah, that's all I want to say.
And Amni, you also wanted to add. Go ahead.
Thank you. Yeah, I just the whole critical mass and creating an ecosystem really spoke to me, because I think that when you look in terms of economies like Kenya, and you compare it to Tanzania and why is funding going, to Kenya, more to Kenya, along with policies and all this, there's something that needs to be said in terms of the community, the ecosystem that has been created in Kenya, whereby there is this, over time, there is this collective knowledge that has been built as a result of hubs, for example, and accelerator programs that are non-aid funded. I think we need to add this, that are really purely commercial, business oriented, that have been able to create this, critical mass of knowledge, number one, but also produce talent of people who actually know how, or young people that actually know how to do business and what it is to work in a company, et cetera. And I think that in Tanzania, we need to get to that point. We need to get to that point where we can really create a large enough, a critical mass of real, I'm not saying that I'm gonna choose my words and be a lawyer, but of entrepreneurs that are, really 100% business, none of this aid-funded business. And I think that then, we could get somewhere, and we could see improvements in Tanzania.
Okay, Joseph, I'll come back to you eventually because I think Amni has prodded you a little bit there. But I want to come to Francis. And Francis, this comparative perspective that Amni has introduced is an interesting one. And I'd love to be able to hear from you, because you're also involved in a fund that invests across Africa. What's not quite happening in Tanzania? Do you agree with everything that's been said, particularly this issue Amni has raised around collective knowledge, hubs and accelerator programs that are business oriented, not aid funded? What are your thoughts?
Thank you, Emilia, for that. Just to make sure you can hear me. This is quite an interesting conversation. I've seen they've actually kind of mentioned most of the things that are kind of restricting or kind of barriers to where we want to go as an ecosystem. So I will just maybe touch base. I'm not going to repeat what you've said around the policy regulations and also tax incentives, which could really be kind of catalyze the angel investment networks and activities here in Tanzania. That cannot be overlooked. And also, I also totally agree with Amne in terms of hubs or accelerators, venture funds, or any other startup support organizations have to be very commercially oriented. Reason being that if as a hub or as a support organization, you are not investing your money, you are not investing your resources, then you have less concern about the development and success rate of those startups. Because probably I get funded from Funguo, and I run an incubation program, and I get paid my admin fee. After 3 months, poof, bye, everybody go home. Then we have to create another program. So we don't really see the sustainability in that, and it becomes like a kind of recycling. The same startups go from one hub to the other, this kind of programs and all that. Then you don't see now. There's no clear path to investment readiness. There's no clear path to bringing in VCs here. I must say that there are a lot of VCs that are quite interested to come to Tanzania ecosystem. But the question remains, where is the pipeline? Who is ready for investment and all that, right? So I also like in terms of where Funguo is going with the fund. If we can actually be able to have more more matching funds to hubs or angel investors or whoever is putting money, then match their fund, then at that point, it becomes not a business as usual for hubs or incubators. But now it's so what are you bringing on board? Are you bringing talent, resources? Are you bringing any money? Then we can be able to give you money to match what you have. So at that point, my $10,000 is already at stake in the startup. I will make sure that they grow, even if they grow slowly, but I'll make sure they grow. And I'll also make sure to provide investment pipeline to be able for them to receive bigger investment to scale. So that could be one of the ways. If you look at maybe also in Nigeria and all that, most of the accelerators are very commercial. They run every year. You look out for this accelerator because they take in maybe 10 people, they support them, they connect them to investment, they cash out, and it's very commercial, straight. Also, of course, they get like support from development organizations, but the business model is already built around, we can be able to make money from accelerator because we're doing a good job. We are bringing the best minds, and we are also going to connect, bringing investors in the sector to be able to, invest in them as well. So that could be a kind of game changer if we want to be able to change the quality of startups that we are producing from Tanzania as well. So if you look at most of the startups that actually have raised funding, I'm not sure there's anyone that actually came from an accelerator or incubator program, right? So that means our incubator programs, so accelerators have not done a lot to supporting the startups to even raise investment. So maybe the models could change, maybe the approach could change. Maybe we want to have like more people build the capacity of the hubs to stop thinking a lot of donor funding, but also be able to create programs that could be very commercially viable. And they can actually be able to get maybe matching fund from donors and to be able to push the operations. With that aspect, we can actually be able to start bringing out the right type of startups that will qualify for like commercial funding from other VCs. So that's like my thought.
Francis, I'm going to come back to you because I want to challenge you. You have a lot of ideas, and I'm going to ask you, what is Serengeti Angels not doing to accomplish exactly what it is that you've talked about? So put that on the back burner, but Joseph, shots have been fired.
Yeah,
and I'd
quite
like
a
to
lot.
hear from you first.
Quite many, but I'm actually enjoying them because that's exactly the kind of conversation we need to be having at the moment. Well, there are actually three critical issues that have been raised. The one is about aid dependency, grant funding and stuff. The other one is about what Funguo should actually do. And this is the part actually what we are doing right now, engaging various people into discussions on how can we leverage on this catalytic funding to be able to do more and to get better startups. Maybe let me probably address the issue of grant funding that quite a growing number of people kind of seem to be opposing. Well, we all know that if grant is used wrongly, it's not going to contribute positively to the growth of our innovation ecosystem. That's granted, everyone agrees with that. But I also oppose the idea that probably all grant funding is bad for the ecosystem. It's not necessarily true. It depends on how it actually gets deployed and it gets applied and who actually gets it. Now, whoever gets it uses it. Because if grant funding is going to be used to de-risk a certain startup that can actually be able to grow and invest their own money and also be able to unlock additional financing, then definitely that's actually the biggest thing that we need in Tanzania at the moment, because there's still lack of private capital. So if we are going to use grant funding to be able to unlock private capital to go into the startups, then by any means we need more grant funding. But we also still need to discuss on how that grant funding gets to be used. I think I totally understand where the many speakers are talking from, because we had a lot of experience of getting a lot of money coming into the country, not necessarily addressing the needs that the ecosystem has, but rather probably looking at ticking the boxes of I want to meet these kind of KPIs, which is not necessarily what the ecosystem needs. So I think that's the kind of discussion we should be having. Otherwise, when it comes to grant funding, I think it depends on where it comes from, because I mean, we know some of the developed economies that are actually supporting their own startups and their own companies through government subsidies. That's grant funding. It's not only that it's not coming from outside, it's coming from their own government. So if it reaches a point that our own government can actually set up a fund which is going to provide grant to their local startups to be able to unlock additional financing, then there won't be any need of grant coming from outside. But at the moment, we don't have that. So we shouldn't starve or maybe deny the startup can be able to have access to grant just because it's sometimes used wrongly. So I think that's a discussion to have. Definitely we can keep on conversing on how we can be able to improve the application of this grant, which is actually coming into the country. That's number one. Number two, I totally agree with Francis. I think there is a need of correctly applying the little grant that comes into the ecosystem, that it can actually be used to complement the private money that some of the angel investors are actually putting in. So that's why we are actually now, because the call is on, We are embarking on info session. We have actually written to all the innovation spaces accelerator in the country, so you can actually have a discussion. If they have any proposal on how we can be able to apply or to use the digital funds we have, definitely we are willing to listen. So this is the first call. It's going to open up doors to more discussions on how we can actually refine the future interventions that are incoming. So I think this kind of conversation is actually the one which is going to improve the way we support our innovation ecosystem going forward.
So Joseph, excellent response, because it raises catch-22s. And Amni, I want to circle back to you first. The first issue I'm hearing, which Francis raised, was, well, where is the pipeline and who is ready for investment? So even if we switch from this sort of aid-dependent model to a more of a private sector capitalization model, are our startups and entrepreneurs ready? Is everyone like Benjamin and Nala, are they ready? That's the first aspect of this. The next is this need of switching from, once again, this sort of dependency model to more of an independent model. Do we have capital, local capital, that's ready to support that kind of a shift? And if you're advising people, what is it that you're telling them in this regard? One, is there a pipeline? And two, is there private capital? I'll start with Amni, then I want to go to Alpha on this.
Okay, thank you for that question, Emilia. Okay, so on the question as, is there a pipeline? I think that what I had said initially is that there are a lot of businesses, but are they investable, right? And I think that in terms of what I have seen is that the pipeline then all of a sudden just really decreases in terms of when you look at the Nalas and the other of these type of companies. But I think that this is where, and I join what Francis had said, is the role of these hubs and these accelerators, right? So whilst we know that, if you look at the models that are used in the US or in Europe in more developed economies, the matching or the merging or the working together of the funding, which is like cash funding, and the capacity building aspect, right? This is, I think, what is needed here. And when I talk about capacity building is, let's look at what makes a company investment ready, right? So there's several things. I mean, in the other panel, I think some guys were saying, all we need is money. We don't really need capacity building, but actually I beg to differ. I think a lot of companies need capacity building, but it's in the sense of like, getting them investment ready in terms of being conscious and implementing compliance. Investors are going to look at governance, corporate governance. There are lots of businesses in Tanzania, but compliance and corporate governance is just something that they're totally unaware of. And yet it's so relevant for investors, to decide whether they are actually going to, invest in you or not. Building in that culture already in the businesses to understand that there are different phases and there's different phases in a company's life. And so you can start off the business as fast as possible and organize yourself as fast as possible. But if you're thinking about getting investors, you need to be thinking about things from the beginning, but a lot of companies are not aware of that. And I think that having accelerators and other kind of partnering, actually the model of partnering with development institutions is not a bad one. But what are development institutions? What are you using the development institutions for? And I think that when they're used to really essentially use risk capital to get companies to be investment ready, to build that knowledge, to build the capacity, I think that is where we are going to actually build a pipeline. So that's my answer to the first question. In terms of like whether there is local capital in the market to invest, yes, there is. But again, we need to educate the people, because at the end of the day, most of us, like, we look at, for example, our parents, right? They may have worked really hard in their lives and, they're retired, they have money and all that. And, even to get them to invest in our own companies is an issue. But why is it an issue? It's because of the lack of knowledge and lack of understanding of, what it entails and what it takes to invest in this space. Because at the end of the day, a lot of them are kind of have that mentality of like, I'm going to buy a kiwanja, like a piece of land, or I'm going to build, and saying, invest in a startup is like, whoa, it's something that is very, very unknown. So I think that there needs to be also an investment in speaking to these people that have money, to educate them in terms of looking at alternative ways of using their investment.
Well, I believe that Edie and Winula would disagree with you. They said they know exactly what they're doing. All they need is cash. So Alpha, talk to me a little bit, add to what Amni has said, and just add another layer.
Yeah, no, so far 10 out of 10, I'm fully on board with that. I think the local capital is very risk averse. You're looking, like you said, you're either going to buy a plot of land or buy shares in a UTT or buy, bonds, something that's very, very safe. I'm not worried about, will my son or my daughter lose the money? Will the startup fail? That's not my concern. I just want to make sure that whatever I have to retire on is there until the day that I, pass on. That's first and foremost. I think to go back to what was mentioned earlier about grant funding as a case for the hubs and for these accelerator programs, I think the way I would look at it is really the inverse point of view. How do we provide these startups that are coming out of these systems, these programs? How do you make sure that they're getting business, be it through providing them actual work from the government, which I think is one solution. But then again, what solution are these guys providing? As a startup, as a tech startup in these incubators, what are you doing for the ecosystem? Not just a placeholder, not just the next whatever it is that's out there, but what solution what problem are you solving that's a burning need to be solved in Tanzania? I think the first part of call should be, if you're looking at it from a grant point of view, looking at what issues the government have that can be solved by these tech startups, and how can we empower them through giving them actual business to do so. So you've gone through 6 months or a year of incubator, you've gone through another year of being business ready. Now you're looking at how can I get business, how can I grow to be a revenue generating company? Your first stop should be, I have a solution that applies into, let's say, TRA's tax system. We provide a service that does X, Y, and Z for the system. Can we get a tender from TRA, or can we be a signer from TRA to provide that service? Then that allows us to branch out into other government agencies or other private sector agencies, given the fact that we have a track record of activity now. Second to that is, these guys, of course, need working capital to get the ball rolling, right? How can we tie in the banks into this discussion as well? So you have a tender or a project from whatever agency that's out there. Now you need the capital to get it started until you get paid by whatever agency is out there. So the bank is looking at, you have this project that's valid, you do supply this service that's needed, we can finance it based on these two principles, and the fact that the government is underwriting this, we can actually empower the startups in this way. I think that would be one way that you can look at to tie in grant funding and sort of the dependency concept into generating revenue for these companies. Now they're actually viable, they have a track record of activity, they have one or two clientele, they can bank on that to run the business in the long term. So that's one thing for me. But back to what Amne is saying about local capital, yeah, we do have an issue. What we saw actually as advisors during the Vodacom IPO was that a lot of handful of individuals who have capital to spend didn't really understand what an IPO is, what Vodacom was doing as far as a company is concerned. So that in alone let me know that there's a big divide between the money that's there and where it needs to go. So going from just simple IPO, looking at it from that point of view, and then trying to factor in oh, it's a startup, oh, it does microfinance, oh, it does fintech. You're building on layers of uncertainty and doubt with people that's already like, look, all I have is 200M until the day I die. I'm not going to lose it all into one quick, bad investment, rather do that in land or something else. So yeah, we have a long way to go. One point I also like to make as well is, to me, what I feel is really overlooked is the fact that comparing us to Kenya or other countries, we haven't had that much room to quote unquote fail in a sense. We've looked at a lot of dependency funding, looked at a lot of grant funding, a lot of competitions that have been pushed around to win $5,000, $10,000 here and there, but no one's really done the through, I guess, the thorough diligence to see where have those companies gone, what's the burn rate, what's the fail rate, and what are the successes out of what's been done so far. At least I haven't seen it. So I'm not, again, the expert, I haven't seen that research being done. This allows us to really look at, okay, what are the real issues that we have? Is it capital? Maybe. Is it knowledge? Is it skills transfer? Is it the capacity on the ground? Is it the tech space? Is it infrastructure? Could be just that the companies that are being brought up in the startup space right now don't have Apple solutions. That could just be it. We're dreaming of being the next Facebook, the next WhatsApp, or the next, iTunes for Tanzania. But is that really a solution that's going to generate income for the country? Or is that really something that's needed in the country? Or are you just hoping that your own personal idea and your own personal incentive is bankable in a sense? I think that's how you should escalate. So if you look at, again, comparing to Kenya, the Kenyan stuff I've heard of so far are focused on solutions that are valid. So we have a problem of X, Y, and Z. Oh, my company will solve X, Y, and Z. So that creates business in and of itself. This is what we need to look at as well. Why are we really failing? Is it, again, capital, ability, capacity, solutions based? What is the issue? So I'd like to address that as well. So yeah.
Interesting, Alpha. So you raised some important points. Maybe we're not as innovative as we think we are, and therefore investors don't necessarily want to.
I didn't say as innovative. I just said maybe not solving the right
Am I
solution.
hearing you correctly?
Innovation is fine, but it's being solutions oriented, not being innovative. So yeah, innovation is there in bundles. Just what are we innovating to solve? Okay. That's the kind of the next step of the question. Yeah.
Interesting. So Francis, include this as your final points. I'd love to hear from you about what challenges Serengeti Angels is facing. Is it a lot of what we've been hearing already? Or are we actually being able to overcome some of the challenges that have been raised? And as you speak to that, feel free to speak to any other issue that you would have wanted to contribute to. And I want to give everybody 90 seconds or so to help us wrap up. So I'm going to start with Francis, and then I'm going to come to Amni, then Joseph. You get an opportunity to respond again, and then we'll close out with Alpha. So Francis, over to you.
All right, thank you very much. Thank you, Emilia. With Serengeti Business Angels Network, we are already looking at deals. I think one of the challenges we've seen is some of the startups here, they are kind of overvaluated. They feel like, I have like few tractions and I have like a team and all that, then I want $2 million. So I want $3 million and all that. But when you put them into like, the whole valuation process, probably they want like 400K or 500K. So there's been this kind of mismatch in terms of like what startups feel like they want or what they think they value at against the current or the standard market valuation for them. So probably playing around in the fintech space, you are benchmarking Flutterwave and all that. I just like to be real. You are benchmarking Flutterwave and saying, they're worth 3 billion and all that in 4 or 5 years. So right now I have this kind of few tractions, then I worth 3 million. But of course, when we are doing valuation, we're not just looking at the sector itself. We're also looking at who is running what. Flutterwave founders, one has already two are digital health for they lead digital transformation for banks. One already had a unicorn. So all of these play a key role in terms of like how business are evaluated. Also because these people already have a huge market base and credibility that can help them really scale. So investors are also looking at and how that kind of reduces the risk in investing there as well. So for angels, it boils down to a lot in terms of like, reaching like an agreeable valuation for startups. But that's just the challenge we face. And we already partner with some of the angels network in Kenya and I think they understand reality and they are open to like having that very tough conversation about valuations, and they get to reach very honest deals with angels, and they get money. So I think here in Tanzania, when we started the Serengeti Angel Network, what I always tell the angels is that we're not going to, look at people that already have big tractions. We want to be able to come to the grassroots and, support. We're not just going to put money. We want to actually help to build the capacity of the team. We want to help them to, go each step with them. So the only challenge is that founders just feel like, we already in the market, we want $3 million. So angels feel like it's too much risk and they don't want to put in money. So we have that kind of challenge we're facing here. Outside that, I think we have really, good solutions. Some startups are really doing well, and I will give them that kind of kudos in terms of what they're doing. Outside that, it's just to add on what Joe was saying. I really want to see a time where hubs can, going to Fungo and saying, Fungo, I have $30,000. Can you give me a matching fund of another $30,000 for us to be able to run a quality accelerator and be able to do investment? I think that's where the conversation should go, and not having Fungo to give you $60,000 and you have $40,000 admin fee to run a program and give $2,000 to startup. We will not be able to find those kind of programs cannot provide the quality of startups that we're looking for, that investors will come in to invest in. So the conversation should really start going to like, Fungo will give you $30,000. What do you have on the table? What are you going to put on the table to match what Fungo is giving to you? Then we can go into, doing transactions to say, we have 20,000, Fungo will give us $20,000. Then we can invest in 2-3 startups on the accelerator program. I think that's where it goes. And when that happens, what Alpha was talking about in terms of like finding trying to trace the success rates of like startups and programs is very easy, because I put in my money, I will trace them and I'll support them until they succeed and they get I can be able to exit and get my money back. So that is where the conversation should go in terms of like, where aid money could become very, very, very important to developing the ecosystem. Thank you.
Thank you very much, Francis. Those are some practical suggestions. And let me first go to Joe and then Amni. Joe, you heard about this suggestion for matching funds for acceleration. You've heard about the issue of R&D, research and development, that's been coming up. We're also hearing very strongly that there's a need for a reality check injection into our entrepreneurs ecosystem. What are your closing thoughts? 90 seconds, please.
Well, I totally agree with all of them. Definitely, I think we need to look at our ecosystem. It's growing. There's quite some positive development, yes, but definitely we are not there yet. I think that's why interventions like what we're doing are still necessary. So as to what Francis is proposing, I think that's just a valid proposition. We can sit down and talk about it, see how we can be able to practically actually do that, because that's exactly what Fungo is supposed to be doing. It's supposed to be unlocking additional financing to go into the innovation ecosystem, not just doing grant for the sake of grant. It's supposed to be leading somewhere else. So as far as I'm concerned, I think this kind of conversation is definitely necessary, and that's what we have been encouraging quite a while. And I think we need to keep on carrying on this talk so we can be able to get solutions through the kind of way it's coming up. So thank you very much for having me. Definitely, it was worth my evening. Yes.
Wonderful. And your being here has been worth our while as well. Amni, your closing thoughts.
Thank you so much. Yeah, so I think that definitely as a lawyer, I would say that there needs to be work in terms of policy and regulatory changes, so as to really create the right environment for private capital to come into Tanzania and to invest in, various startups and SMEs. But something that Alpha said that actually made me think, and I want to share this, is that it's in terms of like investors, a lot of investors that I see coming in, and especially from outside the continent, they're coming in and the whole hype thing is to like invest in tech companies. And I'm like, what happened to good old companies that are not, tech-based or AI-based, that are just creating jobs, solving real solutions, for people. Like it's as though that, like we kind of don't think of, when we talk about private equity, angel investing, VC funding, we're thinking of tech and Silicon Valley style companies. Whilst if you look in terms of the makeup of Tanzania, that's such a small fraction compared to, the whole entrepreneurial ecosystem. So I think we need to, like, I agree with Alpha, what he's saying is, in terms of the aspect of like, why are we failing? But it's also why we need to really do some soul searching and actually see what we really need, not what the US tells us that we need, or what the entrepreneurs, in France or wherever are doing, and therefore we need that. No, what is it that Tanzanian companies are doing? What is it that they need? And try and find, investment capital for that, because I think somehow we are too much in the hype as well, if I can say, and I think we just need to kind of, keep it real.
I like that, Amni. Amni says, let's keep it real. We might be investing in the wrong spaces. Alpha, you're closing us out. What are your thoughts?
Yeah, I mean, we've all said the same thing so far. Let's keep it real. Let's be real about valuations, about the solutions we have, the problems we're really facing, what our grant funding is going towards, what it's not going towards. I'm glad that we have similar kind of voices so far in the panel. My only fear is that the previous panel will get offended by what we're saying, because it goes against what their needs are. Their needs are capital, which is fair. But to get to the capital, you have to prove your worth, sort of. Even us as professionals, to get to a level of professional right now, to be on the panel, we have to prove our worth, be it through experience, be it through what work we've done, be it through who we've, discussed things with, and the work that we've shown. The capital is easy to acquire. So like I'm saying, if it's a salt of the earth company that just does, let's say, construction, that builds roads, that has viable tenders, that's a investment opportunity. It's not tech, it's not fancy, it's not going to win you awards in Silicon Valley or whatever, but it generates income, it puts jobs in the country, the money moves, which is a key thing for any investor. So I'd agree. Let's keep it real.
Awesome. Thank you so much to our panelists, Amni Swedi, Joseph Manirakiza, Francis Omorije, and Alpha Marwa. You've been phenomenal. You've raised practical points. And I think this matters. When we become too academic, sometimes we lose sight of the direction we're wanting to travel in. So Madam Chair of WBAF Tanzania, you've heard it from the source. Things need to be done. What can WBAF do? Over to you. Thank you, everybody. It's been a wonderful evening. Over to you, Madam Chair.
Thank you so very much, Ms. Amelia. Wow, I'm very, very honored. The discussions, the keynotes, they've been quite very informative, very thought-provoking. They have actually given us quite a challenge on what else WBAF can provide in the market, in the entrepreneurship space, but also how we can collaborate with other organizations, policymakers, and government and the private sector itself, which is part of what WBAF does. We engage all stakeholders in order to move forward the entrepreneurship and innovation and angel investment agenda. But also, just in summary, the the takeaways of both the keynotes and the sessions, we have understood that there is an availability of local investors, however, they lack investment knowledge. And us as WBAF, what we provide, we have seen a need in that regard. So we do offer qualified angel investors courses where interested investors here in Tanzania are trained by actual seasoned angel investors or venture capitals on what they should look for in and what exactly is investing in startups and early stage and scale-ups. But also Ms. Amni spoke about the issue of business compliance and corporate governance, that it's not, the issue is not really funding, it's that also the startups in Tanzania or the businesses here are not quite up to speed in terms of what exactly investors are looking for when they're looking to provide funding to businesses here in Tanzania. And once again, us as WBAF, we have seen that need in the entrepreneurship space, and therefore we also provide training, we call it the investor readiness training, to the startups, both here in Tanzania, but also all the startups that are associated with the WBAF forum. We prepare them to be compliant to what investors are exactly looking for, so that we can close the disconnect between the available funding and the startups that are actually prepared already, so that when the two meet, there is more impact. There's a bigger impact in terms of now really solving the issue of funding, and also making sure the startups know that they have to collaborate in that regard, that they're not just thinking that they need funding, but also understanding that the people giving them the money, what exactly are they looking for, so that they can reduce the risks and be more comfortable in offering such funds. But also, lastly, we need policy incentives to encourage local and international investors, as said by Alpha and Ms. Amni, and also our startup, the Startup Association representative, Mr. Pregon. Just to summarize, I really would like to thank all our keynote speakers for their excellent thought-provoking talks. The session, our moderator, Ms. Emilia Simingwa, for organizing and animating the panels and keeping things both under control and reasonably on time. I would also like to thank all the panelists for their input, ideas, and discussions. When we started, I tried to outline what I felt we were trying to achieve here, which is connecting, learning, sharing, and engaging know-how that promotes entrepreneurship and angel investment ecosystem. And I'm very happy that in the last few hours, we have exceeded even my most optimistic expectations in all respects, in the keynote speeches, during the panel sessions, and engaging questions and answer sessions. I hope that the contacts and the networks that have been made here will continue in the future, as I'm convinced that they're very useful. Once again, I would like to invite you to continue engaging with the Angel week-long World Business Angel Investors Week through our global platform. But I also invite you to join us on our global congress in Antalya, Turkey in October, where we'll be engaging the global network of innovators, entrepreneurs, and angel investors. And WBAF Tanzania country office is open for partnership, collaboration, and we're here to serve the entrepreneurship ecosystem. Until next year, asante sana na karibuni tena. Thank you so very much. Have a good night. I hope to see you all here next year again.